Okay guys, as many of you requested, I'm working on ACCA F2 or FMA or MA exam. The strategy that you will use for F3 and F2 is same because the question formats is very similar to F3. The only difference in F2 exam is that instead of 2 questions, big questions, it has 3 questions, and those 3 questions are worth 10 marks. So because the scoring is less, the questions are a little bit shorter than the questions you have in F3. So remember, technique comes after you have studied, so it is not a substitute for study, it is only supplement. So if you don't know topics very well, no matter what technique you follow, you will not be successful in an exam. So techniques will only help you if you know the knowledge, and it will help you pass. If you are already passing, it will help you score a little bit better than you could. And also the ACCA has these sample exams, 3 exams that you can purchase in your account, so I recommend that very much. The score you get in those exams, they're available for F1, 2, 3. I recommend it for F3 and F2. The score you get in that exam and the score you get in real exam, it will be around 5 lower or higher than what you got in that sample exam. So it is very similar to how you receive questions in exam. So I highly recommend that. So the strategy that I used in F3, I'm going to use the same strategy here. You could start from the first question and finish all the way. All strategies work. Remember, all strategies will work depending on how you are following it, or whatever works best for you. So this is a strategy in my mind that would work best for everyone. Otherwise, you could follow any strategy. So the purpose of this video is not just following the strategy. Maybe I'm able to answer some questions faster with easier techniques, or it could be also used as a revision of some of the topics. So the purpose is not just following the techniques. Okay, let's start with the exam. Remember what I did in previous exam, F3, is I marked the theoretical questions. My purpose is to answer the last question first, because they are difficult, and if I do them last, at the end of the exam, I would be tired, I would not have that much, my mind would not be active. So it is better to do those difficult questions first. And that burden will be lifted when we have answered those questions. And before answering those questions, I answered the theoretical questions in the first section first. The reason for that is that they take less time. If I know them, they shouldn't take any time. If I've answered them, it will give me a little bit motivation that I've answered some of the exam. So if I directly start with the last questions, the 10 marker questions, and I take a little bit time there, then I will be worried about the time left. That I would expect that I would be worried that the time that I have left would be less. But the fact is that some of the questions in section A are theoretical questions. So if we answer those questions first, we would not be that much worried. So what I do is I skip through the questions and I mark the theoretical questions. So I come back to them. Okay, so I've skipped through all the section A questions and I've marked all the questions that are theoretical. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. The theoretical questions that are in F2 are a little bit more than F3, maybe 1 or 2 questions more. So I've marked them. The reason is because I want to answer those questions first, and then I want to come back to the section B and answer and focus on these bigger questions. So I can go back and answer those theoretical questions one by one. By answering these questions first, I will be motivated because I would have answered them in less time. They take less time. Remember, I've seen in many places people recommend that you should take a certain time per question. I don't recommend that method because some questions you will see in exam, they will take more time, they will be difficult than others. So the important thing is doing the whole exam in the time available. So don't focus on that. Even, okay, if you're stuck in a question maybe for a longer period, then just skip that question if it's too difficult to answer. Otherwise, some questions take less time, some questions take more time. The time that you waste on some of the questions will be saved by other questions like these theoretical questions. Okay, let's see, which type of benchmarking is the company using? A manufacturing company benchmarks the performance of its account receivable with that of a leading credit company. So we are comparing our receivables with another company's receivable. So what is it? Is it comparative benchmarking, or strategic benchmarking, or functional benchmarking, or internal benchmarking? Receivable is, remember, a function. So we are seeing our function with their function. So it is a functional benchmarking. So I can remove the flag here that I've answered it now. Okay, next one. Which of the following best describes target costing? Remember, target costing you will you will have it in F5 level. In F2 level, it is only theoretical. So you only need to know how the process works. Otherwise, there's a specific chapter for it in F5 level. Okay, so remember, target costing works the opposite of cost plus pricing. In cost plus pricing, we find the cost, we add a profit, and then we find selling price. Complete opposite of that is target costing. We find selling price, we minus a profit from it, and it gives us target cost. The reason it's called target cost is because we are focusing on achieving that target cost. So it is setting cost for the use in calculation of variances, setting a price by adding a desired profit margin to it. No, that would be cost plus pricing. Setting a cost, so we are finding a cost, setting a cost by subtracting a desired profit margin from a competitor market price. Competitive market price, or the price that we believe it is going to be sold in the market. So this is the target costing. Okay, moving forward. I can directly jump to those questions that I've marked. Okay, which of the following factors should not be allowed for when comparing the ROCE, which is return on capital employed, of two organizations to assess the efficiency of their management? Eastland Postal Services is government-owned. The government requires it to provide parcel delivery services to every home and business in Eastland at a low price, which is set by government. Express Couriers Co. is a privately owned parcel delivery company that also operates in Eastland. It is not subject to government regulation, and most of its deliveries are to large businesses located in Eastland's capital city. We have been asked to assess the relative efficiency of the management of two companies. Remember, one is government owned organization, and the other one is privately owned organization. So if you are looking at the efficiency of management, how well they are managing the company, what is the factor that they should not be allowed for? It means it will be same in whichever organization that they are managing. Differences in geographical areas service. You can see that the area that they are serving is different. So we could take that factor, and that way this company is different. Differences in prices charged. Obviously, government would not charge a higher price because they're not focusing on making profits. So this is where a private organization and a government-owned organization will be different. Different objectives. Yeah, they have different objectives. One has a objective of making profits, and the other has objective of giving service, social service. Difference in workforce motivation. Yeah, motivation should be where employees should not be different. They should be motivated where they are in profit-making organization or non-profit organization. What they are motivated for will be different, but motivation should exist in both cases. So this is where there shouldn't be any difference. Under which sampling method does every member of target population has an equal chance of being in the sample? Stratified sampling, random sampling, systematic sampling, cluster sampling. Remember, random sampling, if you're selecting something random, there isn't any system about it. So if there isn't any system, then every data will have chance of being selected. So it is random sampling. Which of the following graphs depicts the total cost of raw material for a period? Up to a given level of activity in each period, the purchase price per unit of raw material is constant. After that point, a lower price per unit applies to both further units purchased and also retrospectively to all units already purchased. Remember, this is bulk discount on all units. One is bulk discount on additional units, but this is bulk discount on all units. So when there's bulk discount on all units, it affects the price of previous units as well. It means that there would be a drop. This graph here is bulk discount on additional units. So we can remove this one. The question is whether it is graph number 1 or 2 or 3. All of them seem very similar. But the problem with this graph is it doesn't start at the bottom. Remember, it is a variable cost, and variable cost should start at the bottom. If it was a semi-variable cost, then it would have started at the top maybe, but it's variable with a discount, so it should start at the bottom. Now we have A and D left. They're also very similar, but if you look at the line, the direction that it is facing, it comes here. So when we look at this one, it goes to the bottom. So when discount is given, the line should be facing the 0. So that's why D is correct. Otherwise, they are very similar, but there is this slight difference that you need to understand. Which two of the following are benefits of budgeting? It helps coordinate activities of different departments. Remember, coordination means helping each other. So when we have a budget, to achieve that budget, one department will be cooperating with another department. It fulfills legal reporting obligations. There is no legal requirement of having budgets. Budgets are involved in management accounting mostly, and management accounting is not legal, it's discretionary. It establishes a system of control. Remember, using budget, when we give someone budget, we give them something to control on. So when we give them budgets, we give them targets, and they have to achieve those targets, and it is a control for them. And what we do is we do variance analysis, and variance analysis is part of a system of control. So using budgeting, so you could say budgeting is helping in establishing our targets, and that targets will be controlled. It is starting point for strategic planning. No, budgets are when strategic plans are broken down into many components. So the answer here is it helps coordination and establishes a system of control. Which of the above examples are true? The following statements relate to participation of junior management in setting budgets. It speeds up the setting of budgets. It increases motivation of junior managers. It reduces the level of budget padding. Number one, it speeds up the setting of budgets. No, if you give lower level management to make budgets, they will spend time on it because they will not be agreeing with each other, especially one department or another department. So it is basically bottom-up budgeting. So bottom-up budgeting takes more time than top-down. It increases motivation of junior manager, yes, because if you give them a budget that they have made themselves, they will believe in those targets, and they will be motivated to achieve those targets. It reduces the level of budget padding. Budget padding means budgetary slack. And budgetary slack means making budgets easier to achieve. So if you give them a lower level the opportunity to make budgets, they will make the budgets very easy to achieve. So that is what budget padding means. It increases, it doesn't reduce budget padding. So the only benefit is it increases motivation of the junior manager. Which of the following are suitable measures of performance at strategic level? Return on investment, market share, number of customer complaints. At strategic level, return on investment. So remember, investment, we have investment centers, yeah? We have cost center, we have revenue center, we have profit center, we have investment center. Investment centers are the highest level, they possess highest level of authority, and usually their objectives are long-term. So return on investment would be looking at the performance at that strategic level. And then market share is the overall, remember market share is how much percentage our product is sold in the market. If overall in the market the products sold is 100,000 and our product sold is 80,000, that would mean we have 80% share. So that is achieved, and having that market share takes time. So usually it is a long-term objective of an organization. And the number of customer complaints would be not related to strategic level. So 1 and 2 here. Which two of the following are feasible areas for correlation coefficient? Remember, correlation coefficient finds the relation of two variables. It could be a positive or a negative. The closer it is to 1, the stronger it is, and its value range from -1 all the way to +1. So anything in between. So the first one is above 1. The second one is also above 1, so it's not acceptable. It can be 0. 0 would mean there is no correlation. It can be -91, so it would be a strong correlation. So the values would be C and D. Which of the following variances values would change if the company switched from standard marginal costing to standard absorption costing. A company operating costs are 60% variable and 40% fixed. So if we change from absorption costing to if companies switch from marginal to absorption, it doesn't matter whether you're switching from absorption to marginal or whether you're switching from marginal to absorption, there will be variances. So which of these? Remember, the variances that are different in marginal costing and absorption costing is the fixed overhead variance and sales variance. In fixed overhead variance, we have volume variance that exists in absorption costing, but in marginal costing, it doesn't exist. In sales variance, in absorption costing, we have sales volume, profit variance, and in marginal costing, the same thing is called sales volume contribution variance. Because in marginal costing, we believe in contribution per unit. In absorption costing, we believe in fixed cost per unit. So the variance that would be different is sales volume variance. Material will be the same efficiency. Fixed overhead expenditure will be the same. Volume would be different. Variable overhead efficiency would be the same sales volume. What would be the effects on EOQ and the total annual holding cost of a decrease in the cost of ordering a batch of raw material? A company always determines its order quantity for raw material by using economic order quantity. Sometimes even looking at the requirement without reading the questions fully, you will be able to answer a question, but I don't recommend that. Maybe there is something hidden in the question. So they're saying, what if the ordering cost reduces? What will be the effect on EOQ and holding costs? See, if ordering cost reduces, we will order many times. If order costs are higher, we try to order many units less times. But when ordering costs are reduced, we try to order many times less every time. So the quantity that we are ordering would be lower every time, because the quantity that we are ordering are less inventory will be held in the warehouse. So ultimately, holding cost will also become lower. So both EOQ and annual holding costs will become lower. Identify whether each of the following statements about uses of big data analysis in organizations is true or false. It helps to analyze the efficiency of business process in real time. It helps to better understand customer behavior and preferences. Okay, big data analysis is analysis of large volume of data. So it helps to analyze the efficiency of business process in real time. Yeah, it's true. Because the more data we focus on, the more truer or realistic it is going to be. It helps to better understand the customer behavior and preferences. Yeah, this is also true. Under which of the following labor remuneration methods will direct labor costs always be a variable cost? Group bonus, day rate, piece rate, differential rate. Piece rate is always variable because we are giving payment per unit. Which of the above statements are true? The following statements relate to advantages that linear regression analysis has over Hilo method in analysis of cost behavior. So which of the above statements are true? The reliability of analysis can be statistically tested. It takes into account all of the data. It assumes linear cost behavior. So which of the above statements are true? The reliability of analysis can be statistically tested. Remember, linear programming works on statistics. It takes all the data, and in any software that we put on, it will be realistic. In high-low method, we're only choosing two things, and basing something on just two things would not be very accurate. It takes accounts of all data, yeah, just like above. In the high-low method, if we have 20 data, out of the 20 we take only 2, and we are basing our estimate on only those 2 variables. But in linear regression analysis, we look at all of them and we look at the average of all of the data. It assumes linear cause behavior. High-low method also assumes the same thing. So the only thing that is specifically true about linear regression analysis is 1 and 2. Which of the following would not be expected to appear in an organization's mission statement? The organization's values and beliefs. Which of the following will not be available? So organization's values and belief. The products or services offered by organization. The organization's major stakeholders. Quantified short-term targets the organization seeks to achieve. So this will not be in mission statement, because mission statement focuses on something that is long-term. So it will be the values and beliefs of the organization, the services that it offers, the major stakeholders. Those are all long-term. So quantified, and remember, something that is quantified is usually short-term. So quantified, and then they use the word short-term, would be focusing on short-term. Let me remove this other mark as well. Okay, which two of the following statements relating to management accounting information are true? There is usually a legal requirement for the information to be produced. Financial accounting is legally required, but not management accounting. So they said which of the following is true. So this is not true. It is produced for parties external to the organization. No, financial accounting, mostly the legal requirement is because it is produced for external parties, the government and the stakeholders. But management accounting is usually secrets, and usually it is not shared with others, so it's not external. So if these two are wrong, the next two should be right. But let's confirm. No strict rules govern the way in which the information is presented. Yeah, it has a lot of discretion. Financial accounting are rules that need to be followed. There's no flexibility there. Management accounting has a lot of flexibility. It may be presented in monetary and non-monetary terms. This is one of the qualities of management accounting, comparing it to the financial accounting, that management accounting can have monetary data and non-monetary. Financial accounting, everything is financial, that's why everything is monetary, that's why it is called financial accounting. Everything in financial accounting has to have value. Okay, so these are theoretical questions done. Remember, even though I did explanation as well, so we have done about 32% of the exam by answering these theoretical questions first. The benefit of this is that if I answer the last questions now, I would not be worried about time, because usually those bigger questions take time. They are complicated. So now I will not be worried because I've already answered 32% of the exam. Okay, let's directly jump to the big questions, 10-mark questions. Okay, what I would do is make these tasks minimized, because if all of them are opened and you look at it at once, you kind of get a little bit worried. So minimize all of them, focus on one thing at a time. So let's read the background. Capco owns and runs 350 taxis and had sales of 10 million in the last year. Capco is considering introducing a new computerized taxi tracking system. The expected cost and benefit of new computerized tracking systems are as follows. By reading the question, I believe it is a relevant cost question. The expected costs and benefit of new computerized taking systems are as follows. The system would cost about 2 million. Depreciation per annum, 75,000 has been spent on staff training in order to evaluate the potential of new system. Further training costs of 425 would be required in the first year. If the new system is implemented, sales are expected to rise to 11 million in the year 1. If the new system is implemented, thereafter increase by 5% per annum. If the new system is not implemented, sales will be expected to increase by 200 per annum. Despite increased sales, saving in vehicle running costs are expected as a result of new systems. These are estimated at 1% of total sales. 6 new members of staff would be recruited to manage the new system at a total cost of 120,000 per annum. Capco would have to take out a maintenance contract for new system at a cost of 75,000 per annum for 5 years. Interest on money borrowed to finance the project would cost 150,000 per annum, and Capco's cost of capital is 10% per annum. Let's see what is required. In order to determine whether computerized tracking system should be introduced, indicate whether each of the following is relevant or relevant cost for net present value calculation. Remember, net present value topic is not F2 topic. It is not management accounting topic. It is financial management topic. The advance of this you will study in F9. The reason they have put it in F2 level is because if financial management doesn't have any basic paper, that's why they have put it here. And one area where it is relevant is that both of them are management and both of them use relevant costing. So in management accounting, when we are making a decision, in financial management, when we are making a decision, we focus on the relevant cost. So here they're asking about the relevant or irrelevant cost. Okay, computerized taking system. Let's read. They said the system would cost 21 million. Okay, it would cost. So it is something we will spend on, so it would be relevant. Depreciation. Remember, depreciation is notional cost. A relevant cost has 3 criteria. 1, they are actual cash flows. They should not be notional like absorption or depreciation. Second criteria is it should be relating to the future, not the past. It should not be sunk cost. Third criteria it has is it should not be a committed cost. Sometimes cash flow is a future, but because we have already signed an agreement for it, so it would not be relevant. So depreciation is notional cost, that's why it is irrelevant. Training cost of 425,000. If you look at training cost here, 75,000 has already been spent on training. It is already done, sunk cost. It would not be relevant. But further 25 will be done. So this would be a relevant cost. It is future cost. Then we have new staff total salary of 120,000 per annum. Let's look at that. 6 new member of staff would be. Remember, if we already have labor available and if they are free, labor is something. The relevant cost of labor and the relevant cost of material and stuff you will study in F5 in details. But the thing is, if you already have labor, they're already free, there will be no relevant cost. If you don't have labor or if they're not free, there will be relevant cost. In this case, so we are hiring new staff. 6 new member of staff would be recruited to manage the new system at a total cost of 120,000 per annum. So it would be relevant because additional staff is hired. Staff training cost of 75,000 is not relevant because it has already been incurred. Sunk cost. Interest cost of 150,000 per annum. Let's look at what was an interest cost. Interest on money borrowed to finance the project would be 150,000. Remember, even though we are going to borrow 150,000 to fund the project, I believe this is very complicated idea for F2 level. because you don't know the logic behind it in F2 level. When you go to F9 level, you will see when we take the cost of capital, the discount factor, which is used to calculate NPV, already includes the interest. So when we are considering the 10% or 12%, whatever percent it is, like here we have 10% cost of capital. This 10% cost of capital already it takes account of the interest cost. That's why the interest would not be relevant, even though it is something we are going to incur in the future. So it is irrelevant. Calculate the following values if computerized tracking system is implemented. Okay, increase in sales in year 1, savings in vehicle running costing in year 1, present values of maintenance cost over the life of contract to nearest 3 decimal, nearest 1000. Okay, figures are given in whole numbers, we have to convert in 1000. Okay, the first thing is asking what is the incremental sales. Okay, yeah, here sales are expected to rise to 11 million in year 1. They are going to rise to 11 million. It doesn't mean it is necessarily because of the computerized system. If the new system is implemented thereafter, increasing, okay, if the new system is implemented thereafter, increasing by 5% per annum. If the new system is not implemented, sales will be expected to increase by 200,000 per annum. So okay, so they would rise to 11 million, after which they would rise by 5%, but that 5% includes the normal increase. Even if we don't have computerized system, we would still expect an increase. But with computerized system, there would be 5%. Without computerized system, it would be less than that. So they are saying because of computerized system, yeah? Calculate if computerized system is implemented. Okay, so we have 11 million sales. Is there any other sales given? Okay, oh, we already have 10 million. We have 10 million last year, and in year 1, computer system would already have been implemented. So this 11 million would have the effect of this 11 million increase would have that effect of increase because of the new system as well. So let's see if we have 10 million. Okay, 11 million minus 10 million. We have 1 million increase in first year. So they're talking about first year, yeah? Yeah, they're not talking about first. They're not talking about second year. They're talking about first year. Okay, so we already had 10 million last year, and we would have 11 million. That would be when we have implemented the system. So total increase would be 1 million, and out of 1 million, it is total, including the system. And if we didn't have the system, there would still be increase, and that increase would be 200. So 200 deducted from the 1 million. If we can calculate that in thousands minus 200, we would have 800. It's okay, it's asking the whole, only this one is asking in thousands. So we have to write here the whole thing here. Savings in vehicle running costs in year 1. Okay. Okay, despite saving, okay, saving in vehicle running costs are expected as a result of the new system. These are estimated at 1% of total sales. Okay, what is 1% of total sales? 11 million is total sales in year 1. There isn't anything complicated about this one. It's just straightforward. We have 11 million multiplied by 0.01. That would be 1/10,000. Next, present value of maintenance cost. Present value of maintenance cost over the life of the contract to nearest thousand. Present value of work maintenance cost. We have to convert it to present value. Okay, maintenance cost. Capco would have to take out maintenance contract for new system at a cost of 75,000 per annum for 5 years. So remember, this is 5 years, 75,000 every year. So remember, they will not tell you that it's an annuity, but when something happens annually, we look at annuity table. The easiest thing to do is to take annuity table for, it is straightforward. It starts from year 1. It doesn't have any complication where it starts from year 0 or any other year, maybe in year 3 or 4. So it starts from year 1 to 5. No problem there. We have cost of capital of 10%. So we will look at NPV, annuity factors, 10%, 5 years. We have 3.791. So 75,000 multiplied by 3.791, which becomes 284,000. So they said in thousands, so it would be 284,000. Okay, nearest thousand, they say. It's not said decimal point. It means we don't have to write figures after 24,000. To nearest thousand, they said. Okay, Capco wishes to maximize the wealth of its shareholders. It has correctly calculated the following measures for proposed computerized staking system project. Internal rate of return 14%, the return on average capital employed is 20%, the payback period is 4 years. Which of the following statements is true? The project is not worthwhile because the payback is less than 5 years. The project is not worthwhile because IRR is less than the ROCE. The project is not worthwhile because IRR is greater than the cost of capital. The project is worthwhile because IRR is positive. Okay, let me read the question again. Capco wishes to maximize the wealth of its shareholder, which means we have to use NPV. NPV, when NPV is positive, it means the wealth of the shareholders will be increased. It has correctly calculated the following measures for proposed computerized system. We have IRR. IRR is 14%. IRR is higher than our cost of capital of 10%. So it means that this project would be worthwhile. We have ROC of 20%, payback period is 4 years. The project is worthwhile because the payback is less than 5 years. They didn't say anything about 5 years. Remember, if they had given us a time period, then that would be correct, but they didn't say anything about our limit. The project is not worthwhile because IRR is less than ROC. It doesn't matter. The project is worthwhile because IRR is greater than the cost of capital. Yes, IRR is, remember, break-even cost of capital. When our cost of capital is lower than IRR, it means that the project is profit-making. Okay, let's look at another question. Again, minimize it. Okay, Castilda co-manufactures toy robot. The company operates a standard marginal costing system and values inventory at standard cost. The following is an extract of partly completed spreadsheet for calculating variances. Okay, we have standard cost card, selling price, and everything. Directly, let's look at, when you have things like this, directly go to the requirement. Don't spend your time here. Okay. Which formula will correctly calculate direct labor efficiency variance in cell B18? Okay, we have B18. Direct labor efficiency variance is 48,000. So remember, this is testing your knowledge of spreadsheet, and also you don't just need to know spreadsheet, you need to know variances as well. So this is doing variances in spreadsheet. So let's see which one will calculate. Efficiency variance, remember, is when we have the time taken is more or less than the standard time. So we have options here. One thing is you could look at these options and see which one would be correct. Another thing is would be specifically going there and then looking at the options, whichever way you find it easier. Okay, we have standard cost card, selling price, direct material, direct labor, production overheads, standard contribution, actual and budgeted activity levels and units, sales, production, actual revenue and variable cost, sales, direct material, direct labor, variable production overheads, total direct material, labor rate and efficiency, and total variable production cost. Remember, efficiency would be found by looking at the actual units, which we have here, 27,000, by multiplying by standard labor rate, which 24,000. We have this one would be C9. So we have C9 here. Do we have anyone that has C9? Yeah, we have A and B, so that means A or B could be correct. We have another one here as well, C9, but we will decide later. Okay, we have C9 multiplied by C4 in this one, and both of them. So it means maybe there is something here. So we have C4, 48, which would be standard. See what is here? We have the hours standard at rate. So yeah, this would be correct. Taking the units multiplied by 48. So this is correct. And minusing this would give us standard. From this we would want minus actual. So actual is okay, others are given. What is B13? B13. Okay, B13 is 150,000 hours. This is the total cost. No, we would look at the standard cost, not actual cost. This is actual labor cost. We look at the actual hours, multiply by the standard rate. The actual hours are given 150,000, multiply by the standard rate, which is 8. Let's see whether 150,000 multiplied by 58 is okay or not. 150,000 multiplied by 8 is 1.2 million. If you can see, it is different than that. So that means this is correct. We have C9, this one, multiplied by standard hour at standard rate minus actual hours at standard rate. Still look, we use a standard costing operating statement to reconcile budgeted contribution with actual contribution. So we are using marginal costing. The hint is contribution. A standard cost operating statement for month 1 is given below, with some information missing. Some things are given, some are missing. We have to complete it. Complete the reconciliation for standard cost card operating statement for month 1 below. We have budgeted contribution, which is not given. Budgeted contribution, we have total sales variance, sales volume variance. Remember, when we minus when we take budgeted, you should remember the operating statement for this one. The operating statement using marginal costing and the operating statement using absorption costing. Remember, they are very similar. The only difference is that in marginal costing we have budgeted contribution, in absorption costing we have budgeted profit. Otherwise they are exact same. And another difference is in absorption costing you directly find actual profit. In marginal costing we find contribution, then we minus fixed cost variances and then find profit. You need to remember the operating statement. If you don't remember, you need to go back to it. Okay, sales volume variance. Is it given or do we have to calculate it? Okay, I believe it's not given. So budgeted sales was 25, actual sales is 25,600. So sales are more. When sales are more, it should be favorable variance. Okay, without calculating. Maybe if I don't calculate the figures right, I know that conceptually when we produce more, when we sell more units, then volume should be favorable. Then we take that. You can clearly see 25,600 minus 25,000 will give you 600. That multiplied by contribution will give you the difference, the amount. So we have 600 multiplied by contribution, which is 28. $16,800. So we have 16,800 favorable variance. Next, standard contribution on actual sales. So when we take the top, we minus the bottom, it should give us standard contribution on actual sales. 700,000 is minus 16,800. 68. Sorry, it is added. It's favorable, yeah. If it was adverse, I would have deducted. So it is 71,600. Next, sales price variance, which is just looking at the standard price versus actual price. So the units that we sold, 25,600, should be sold at 120 per unit, which would be 3 million. Let me make this a little bit bigger. Which should be 3 million. We should have 3 million sales, but actually it is 3,000,007. And you can see this is lower. So I can directly click on adverse here. Just have to minus the amount. $25,600. 25,600 units should be sold at 120, but they are sold at 3,066,880. 5120. So we have sold it for 5,120 less than we should have sold it for. Okay, that completes this one. Castello Cost Management Accountant thinks that the direct labor rate and efficiency variance for month 1 could be interrelated. Direct labor rate and efficiency. Yeah, they could be related. Remember, if your rate is favorable, your efficiency will usually be adverse, because if rate is favorable, it would mean lower rate, and lower rate usually means lower skilled. So they could be related, and likewise, opposite is also correct. Okay, so which two of the following could explain their relationship? Higher grade labor performed tasks more efficiently. Is the efficiency favorable here? Yeah, and rate is adverse. If rate is adverse, it means that they were high skilled. That's why maybe we have paid them higher. And because they are high skilled and they would work faster, so the efficiency should be favorable. If your rate is adverse, your efficiency would usually be favorable. If your rate is favorable, your efficiency would usually be adverse. So higher grade labor perform tasks more efficiently would be correct. But they said to lower grade labor perform tasks less efficiently. No, it is not true here. They're talking about this question specifically. Generally, this would be correct. A productivity bonus was paid to direct labor. Actual production was less than budgeted. Actual production is clearly not less, it's more. So the only thing that's left is C. A productivity bonus was paid to direct labor. Yes. The reason the rate is higher is maybe because the efficiency was good. We rewarded for that efficiency by paying them a little bit higher, so that's why we have higher rate. Okay, again, minimize all of the things that will distract us. Okay. Nicholson Co. sells mobile telephones. It supplies its customer with telephones and wireless telephone connections. Customer pay an annual fee plus monthly charge based on calls made. The company has recently employed a consultant to install a balanced scorecard system of performance measurement and to benchmark the results against those of the Nicholson Co.'s competition. Unfortunately, the consultant was called away before the work was finished. You've been asked to complete the work. The following information is available. We have sales revenue, sales attributable to new products, average capital employed, profit before tax, average number of customers, average number of telephones returned for repair each year, number of bills queries, number of customer complaints, number of customers lost, average number of telephones unrepaired at the end of each day. Okay, let's see what they're asking in task 1. Calculate the following ratios: return on capital employed, return on sales, operating profit margin, and asset turnover. Average wait for telephone repair to nearest whole number. Okay, return on capital employed would be profit divided by capital employed. Profit before interest and tax, 49 million divided by capital employed. Is capital employed given? Average capital employed is given. So 48 divided by 92. Uh, 192. Average capital employed means capital at the start of the year plus capital at the end of the year divided by 2. But in F2 and F3 level, they will not make it that complicated. So we have 25% if we multiply by 100. So they said write it as a percentage, which means 25. Return on sales or operating profit margin, which means profit as a percentage of sales. Or this is also known as profit margin, just profit margin. We have profit before interest and tax, 48 million divided by sales, which is 480. So 48 divided by 480. Which becomes about 10% if you multiply by 100. Asset turnover. Asset turnover is sales divided by capital employed, which is return on capital employed and asset turnover are very similar. This looks at profit as a comparison to the capital employed, and this looks at sales only. So we have 480 divided by 192. which would be 2, they said, times. If as a percentage, they said it would be about 250%, but they said 2 times, so it would be 2.5 times, which basically means 250%. And then average wait for repairs in days. Okay, we have average number of telephone repairs at the end of each day, and how many are returned. We have 804. Average number of customers lost, number of customer complaints. Number of customer complaints are 21,600. Average number of, okay, these are returned. So if 80,000 are returned and 804 are left, it means they are not repaired. So 804 divided by 10,000, that becomes about 8%. If we look at a year, multiplying by 365, it would be about 29 days. If 804 are not repaired, that represents about 29 days wait. Calculate the following statistics for Nichols & Co. Give your answer to 2 decimal places. Percentage of customer lost per annum, and percentage of sales attributable to new products. Customer lost. Number of customer lost are 117,600. And what is our total customers? If we divide that by total customers, it will give us the customers lost. Okay, 1.9 million. So these are just basic ratios. Percentage of sales attributable to new products. Okay, how much is our new sales? Number of customer complaints. New sales. Okay, here we have 48 million, and our whole sales is 480. So $8 million divided by total sales, which if multiplied by 100 would be 1.6. So they didn't say anything about decimal points. Okay, here they said 2 decimal points. So if you see which is it closer to, 1.67. If we round it off, it should be 1.67. Complete the following explanation of balance scorecard. A balance scorecard measures the performance from 4 perspectives: customer, innovation, learning, financial, and internal business process flexibility, non-financial success. It is business process, how we are doing things. Balance scorecard is balance in that it requires managers to offset bad performance in one area with good performance in another, deliver performance in all 4 areas, achieve an equal number of KPIs, key performance indicators in each perspective. It is balanced scorecard basically means you need equal focus on all areas. That's why it means balanced. Okay, that is this done. So now we have only small questions remaining. So we have taken 1 hour, about 1 hour, and we have about 38% of the exam remaining, and that is me talking. So if you know the topics, the time is more than enough. For each process, was there an abnormal loss or gain? Information relating to 2 processes, we have process F, normal loss is 8%, input is 65, output and normal loss 5%, input 65. Okay, if the output is more than expected, there will be gain. If output is less than expected, there will be loss. Okay, if 65,000 is input and we expect 8% loss, that would mean 92% output, 59,800 output. So here it is less. We have abnormal loss here. Process F, abnormal loss. G. Let me make this a little bit smaller. The other one, 37,500 multiplied by 0.95, 5% less. Sorry. 37,500 multiplied by 0.95. 35,600 would be expected output, but output is 700, which is about 75 more, so we have an abnormal gain here. What would be the profit for next period using marginal costing? The following budgeted information relates to manufacturing company for next period. Production 14,000, sales 12,000, fixed production cost 63,000, fixed selling cost 12,000. The normal level of activity is 14,000 units per period. Using absorption costing, the profit for next period has been calculated as 36,000. Remember, the difference between absorption costing and marginal costing profit is because of the fixed cost. So if we remove the element of fixed cost, then their profit would be, we can find the marginal costing profit. Okay. We have production 14,000. And remember, it is because of the closing inventory being higher or lower. So production is 14,000, sales is 12,000. It means we have 12,000 closing inventory. Opening inventory is not given, so that means inventory has increased by 2,000. 2,000 multiplied by the fixed cost per unit would give the difference of profit. So we have to find fixed cost, fixed production cost. Is it actual or budgeted? Okay, this is budgeted. So they said normal level of activity is 14,000. If that is the case, 63,000 divided by 14,000. Sorry, let me clear this. 63,000 divided by 14,000 normal level of activity will give us OAR, overhead absorption rate, so which is 4.5. Multiplying that by the units, which is 2, will give us 9. So 9,000. 2, it's not 2, it is 2,000. So 9,000. 36,000 if is the profit of absorption costing. Absorption costing profit should be higher because closing inventory is higher. When closing inventory is more, absorption costing profit would be more. So marginal costing profit would be less, 27,000. So the difference between absorption costing profit and marginal costing profit is the difference between opening inventory multiplied by OAR. If closing inventory is higher, absorption would be more profit. If opening inventory is higher, marginal costing would be more profit. What is the budgeted raw material purchases for next period. A company manufactures and sells one product which requires 8 kg of raw material in its manufacture. The budgeted data relating to the next period are as follows. Sales 19,000, opening inventory finished goods 4,000, closing inventory 3,000, opening inventories raw material 50,000, closing inventories raw material 3,000. Okay, first we have to find how many units we need to produce, which would be sales minus what we already have, 4,000, plus what we want at the end, which is closing inventory. So we need to produce 18,000, which is less than sales, and they would require 8 kgs of material. So there would be 144,000 kgs. From this we are going to minus what we already have and plus what we want at the end. So in kgs it becomes about 147,000 kgs. What is the company's returns on investment? Return on investment or return on capital employed means the same thing. The only difference is return on investment usually means departmental wise, and return on capital employed means a whole organization, but usually they mean the same thing. Okay, a company has capital employed of 200. It has a cost of capital of 12% per year, and its residual income is 30,000. Okay, residual income means income I have after we have removed the notional interest. So this is not actual profit. This is the profit after 12% deduction. This 36,000. So if 36,000 is after 12% have been deducted, that means that if I divide this by 0.88, it will give me total profit. Yeah. Cost of capital return, the residual income is, okay, sorry, 200,000 multiplied by the notional interest, which would be 12,000. We add back 36,000 plus 24,000 is the profit that we would have made, and then divide that by 200,000, which would give us 30%. Which two of the following could have caused the variance? A company has calculated a 10,000 adverse direct material variance by subtracting its flexed budget direct material cost from its actual direct material cost for a period. So which two of the following could have caused the variance? So this is also kind of a theoretical question. So we have 10,000 adverse direct material variance. So maybe we have purchased material expensive, or maybe we have used more. Units sold being greater than budgeted. No, units doesn't have any effect on adverse. If we have more units, we would already account for that. Units produced being greater than budget. Doesn't matter. An increase in raw material usage per unit. Yeah, that would be adverse usage. An increase in direct material prices, that would be adverse price. What was the fixed budget profit for the period? A company has recorded the following variances for a period. Sales volume variance 10,000, sales price variance 5,000, total cost variance 12,000. Standard profit on actual sales for the period was 120,000. Okay, so what was the fixed budget profit for the period? Sales volume variance is 10,000. Price variance is 5,000. And total cost variance is 12,000 adverse. Standard profit on actual sales for the period was 120,000. So they are asking about budgeted profit, fixed budgeted profit. So if we remember, the standard profit on actual sales is given, which means that this is after we have deducted. Remember in the previous format we saw the answer of some questions are another. Let me show you that. It was in these big questions, I believe. Let's see if we can have it. Yeah, here, budgeted contribution, sales volume. If they have given you standard contribution on actual sales or standard profit on actual sales, it means that sales volume have been deducted. So if we add back the sales volume variance, it will give us budgeted contribution, or in absorption costing, it will give us budgeted profit. So if I take standard profit on actual sales, and because adverse sales volume is adverse variance, if I add it back 120,000 plus 10,000, 120,000 plus 10,000, adding it back will give us budgeted profit, which is 130,000. What is the budgeted total production cost if company operates at 85% capacity? ACCA has manufacturing capacity of 10,000 units. The flex production cost budget for the company is as follows. If capacity is 60%, we would have a total production cost of 11,280. If capacity is 15,120, if capacity is 100%, we will have 15,120. And this type of question, okay, 10,000 is given already. So we have manufacturing capacity of 10,000. If we have 100%, which means 10,000, and if we have 60%, then it will be 11. We have to see whether it is variable cost or fixed before we do high-low method. Remember, before you use high-low method, just find whether it is semi-variable cost or fixed. So 100% would mean 10,000 divided by 10, 1.15. Let's see the other one. 10,000 multiplied by 60% would be 6,000. So 11,280 divided by 6,000 is 1.8. So for lower units, it is higher per unit. It would mean it is a semi-variable cost, and we would use high-low method. So take high cost minus low, and then divide this by high units, which is 10,000, minus low units, which is 6,000 in this case. So it gives us 0.96. 0.96 would be variable cost. So 11,280 minus 0.96 multiply by 6,000. 552, 5520. I'm not confident here. Let's do it here. Okay, we have cost of, so obviously you will have a piece of paper where you could do this working. So when question is a little bit bigger, needs calculation, it is better to do it on piece of paper. So if 15,120 minus 11,280, divide this directly by 10,000 represents 100%, so 6,000 represents 60%. So we have 0.96. Then take any activity. Let's take the higher, minus variable cost into units will give us fixed cost, and then taking that fixed cost, adding back the variable cost, 85% would be 8,500 about. So we would expect 13 595 to be the answer. Sorry, I have multiplied by 95. 13,680. What is the internal rate of return IRR of the project? Using an internal rate of return of 10% per year, the net present value NPV of a project has been correctly calculated as 50 if the interest rate is increased by 1%, which means if interest rate becomes 11%, 10% increase by 1 means 11. The project NPV falls by 20. If it falls by 20, then 50 minus 20 would be 30. So what would be IRR of the project? So this is positive 50, and if it falls by 20, it gives the answer of 30. 30 is also positive. Remember, IRR should be between two negatives, between one positive and one negative. If both of them give you positive answer would be above both. If both of them give you negative answer should be below both. So 20% seems very high. I would not expect that to be the answer. 11.7% seems reasonable, and 7.5% is also not reasonable because it is lower. So both 11.7 and 12.5 seems the right answer. But let's calculate. Remember, you need to know the IRR formula. So IRR is lower discount rate, which in this case is 10%, and NPV of lower discount rate was 50. Let me first put all the figures. We have lower discount rate and higher discount rate, which is 0.11. NPV of lower discount rate is 50. NPV of higher discount rate is 50 minus 20, which becomes 30. So we have lower discount rate plus NPV of lower discount rate 50 divided by NPV of lower discount rate minus NPV of higher discount rate. So which is 50, 20 minus 30. So what I like to do is take 50 divided by 30. 50 minus 30 would be 20. It becomes 2.5. And then 2.5, then here we have this multiplied by 0.11 minus 0.10. Remember, you need to know the formula. I know the formula in my mind. So I would take 2.5 now, and the result of 0.11 minus 0.10 would be 0.01. So I will directly multiply it by 0.01, which would be 1%. So it gives me about 2.5%. So 0.10 plus 0.025 equals 12.5%, which is D here. After the reapportionment of service cost centers cost has been carried out, what is the total overhead for production cost center P? Remember, this is absorption costing, and apportioning the whole thing would take a lot of time. So only focus on specific department they have asked. A factory consists of two production cost centers P and Q and two service cost centers X and Y. The total allocated and apportioned overheads for each is as follows. We have P 95,000, Q 82,000, X 46,000, Y 30,000. It has been estimated that each service cost center does work for other cost centers in the following proportion. Percentage of service cost center X to P is 50%, 50%. Percentage of service cost center Y to P 30%, 60%, and 10%. The reapportionment of service cost center cost to other cost centers fully reflects the above proportions. After the reapportionment of service cost center costs have been carried out, what is the total overhead? Remember, Y gives service to X, but X doesn't give service to Y. So what we are going to do, first divide y because it gives service to all of them, and then divide x because x only gives service to P and Q. So which means we are using step down method here. So we have 46,000. Let's do it here. We have 46,000 we are sorry, I'm dividing y first, which is 30,000 divide by 100, and then 30, 60, and 10. I only need P and X. P because P is specifically asked, and X because X will be then apportioned on P and Q. So I don't need Q. So divide by 100 and multiply by 30 is P. And then 30,000 divided by 100 multiply by 10 equals X. Now added that with X, which is 46,000 plus 3,000 becomes 49,000. 49,000 divided by 100 multiply by only P, 50%. So we have added 9,000 plus 24,500, and its own cost is 95,000. So it means 128,500 would be the answer of P. So only answer what is required. You don't have to make the whole format and find the answer for Q. Only P is asked, so we've only answered P. What was the total value of 2,000 units transferred to finished goods warehouse last month? A company which operates process costing had work in progress at the start of last month, 300 units valued at 1710, which were 60% completed in respect of all costs. Last month, a total of 2,000 units were completed and transferred to finished goods warehouse. The cost per equivalent unit for costs arising last month was 10. The company uses FIA method of cost allocation. So what was the total value of 2,000 units transferred to finished goods warehouse last month? Okay, 300 is opening, and we have last month a total of 2,000 units were completed and transferred to finished goods. What about closing inventory? Do we have any closing inventory? Remember, if we are using the closing inventory is not given, so I would not expect there to be a closing inventory. Remember, if we are this question would be answered different way if we were using FIFO method or if we were using FCO method. In FIFO method, the 1710 cost that relates to the 300 units will go to the finished goods. So all of this relates to finished goods. And then they said here that we have 10 cost per equivalent unit, which is the new cost. It doesn't include this cost. So these units were 60% complete. If they were 60% complete, it means we did 40% of the work remaining. So $300 units multiplied by 40% would be 120, and remaining finished units, if total are 2,000, then remaining would be 1,700. and those 1700 units are 100% complete. So we would have 1700 plus 120, 1820 equivalent units. If the cost per equivalent unit is 10, then multiplying by 10 would be 18,200, the new cost plus add the old cost, opening cost, which is 1710. So 19,910 should be the cost. If we were using average costing method, then we would have added this cost to the total as well. But remember, in FIFO method, we keep that cost separate and we add it directly. So this cost would not be included in equivalent cost. What was the budgeted net profit for last period? A company uses marginal costing. The following variance occurred in last period when actual net profit was 40,000. Materials 900 adverse, labor 1,000 favorable, overheads 700 adverse, sales price 500 favorable, sales volume contribution 900 favorable. So what was budgeted net profit for last month? This question also relates to, I believe, the format, but let's see. We had a company uses marginal costing. Okay, the following variances occurred in last period when the actual net profit was 40. And what are they asking? Budgeted. So we are going from bottom to the top. We are going in reverse order. We are finding budget from actual. So it means adverse would be added and favorable would be deducted. Okay. We have material variance 900. Okay, this was our actual profit. So we will add back the adverse. Labor favorable would be minus. Overheads adverse will be added. Sales price favorable minus. And sales volume contribution favorable minus. So 39,200 would be the budgeted profit. Which of the above combination of profit and losses for 2 months is consistent with above data? A company manufactures and sells a single product in 2 consecutive months. The following levels of production and sales in units occur. We have month 1, month 2, sales 3,800, 4,400, production 3,900, 4,200. The opening inventory for month 1 was 400 units. Profit or losses have been calculated for each month using both absorption and marginal costing principles. So which of the following combination of profit and losses for 2 months is consistent with the above data? Okay, so we have sales and production. So production is more than sales. Closing inventory would be higher. So it means absorption costing profit will be higher in month 1. Here we have sales 4,400 and closing production 4,200. It means we have the opening inventory there, which goes from here, would be 100, but the sales is not consistent. If 4,200 is production, and okay, we already have opening inventory here. Okay, so we have 400 opening inventory, and here we have closing inventory of, okay, 400 is opening, closing is 100. Yeah, if 3,900 is produced, 400 we already have, 3,800 is sold, we'll have 500 closing. Okay, closing is higher. This 500 closing becomes opening next year. So adding that with the production, and if we have sold 4,400, closing is 300. So here, closing inventory is higher, here closing inventory is lower. So your absorption costing profit would be more, Here absorption costing profit will be less. They didn't give any data about profit or loss per unit, but for any figures here that give us that, result should be correct. Okay, in month 1, if this is 200 profit, this is 400 loss. Yeah, because marginal would be less. In month 2, if it is 3200, that is 4400. This could be correct. But let's look at the others. 400 loss, no, this is not correct. 400 loss, profit, no, doesn't seem correct. This is higher, this is lower, this is higher, this is lower. No, A is correct. Here marginal costing, absorption would be higher, marginal lower, absorption lower, marginal higher. What was the percentage degree of completion of closing work in progress? A company operates a process in which no losses are occurred. The process accounts for last month when there was no opening work in progress was as follows. We have cost arising, we have finished output 10,000 units, and we have closing work in progress. The closing work in progress was completed to same degree for all units of cost. What was the percentage of degree of completion of closing work in progress? Okay. So let's see. If we look at cost per unit of finished goods, therefore 80,000 divided by 10,000, 48. They are complete. And if we look at the incomplete, the work in progress divided by 4,000, it becomes 36. It means the cost here per unit is 36, while there it was 48. So if we take 38 half completed by 48, it will give us percentage. So I would expect 75% to be the answer. So the cost of the work in progress is 75%. So it would mean that it is 75% complete. If an employee produces 200 units in 8 hours on a particular day, what is employee's gross pay for that day? An organization operates piecework system for remuneration, but also guarantees its employees 80% of a time-based rate of pay, which is based on 20 per hour for 8 hours working day. 3 minutes is a standard time allowed per unit of output. Piecework is paid at the rate of 18 per hour. So if an employee produces 200 units in 8 hours a particular day, what is the gross pay? Okay, if an employee works, first let's calculate bonus. If 200 units are produced and they should take 3 minutes, that would be 600 minutes. 600 minutes divided by 60 would give you 10 hours. But the employee did it in 8 hours. That would mean 2 hours saved. 2 hours saved is given bonus. 80% of the time given is given bonus. Okay, 80% of the time based rate of pay, which is based on 20%, 20 per hour for 8-hour day. Piecework is paid at 18. Okay. So the employee receives piecework basis, but the time base is 20. Okay, an organization operates a piece rate system of remuneration, but also guarantees an employee's 80% of a time-based rate of pay, which is based on 20 hours for 8-hour working day. Okay, which means that if you don't work enough, you will receive at least 16. So So 16 multiplied by, this is minimum guarantee, by 8 hours would be 128. This is minimum. So I thought this was a bonus, but it's not bonus system. This is just a minimum guarantee. So I didn't read the question completely. Okay, minimum. So 121 is the minimum pay. If this employee produced 200 units, multiply by 18, okay, piece work is paid at the rate of 18 per standard hour. So that means every hour that he works and he produces 1 unit, we will give them 18. If he doesn't produce any unit, we give them 16. So it's from minimum 16 to 18. It's a very strange question. It needs a little bit thinking. Okay, yeah, I got it. The company says we will give you minimum 16 if you work faster. We will not give you less than that. So if you work for 10 hours, it means you did the work of 10 hours. We will give you at least 16 for this. Now, whichever is higher. If 160 is higher, or the normal pay is 8 hours multiplied by 18, 144 is higher. So 160 is the minimum that they will pay. So 160 is the answer. Sorry, 10 multiplied by 18. By how much was total overhead under or absorbed for the period? A company uses an absorption rate OR of 3.5 per machine hour based on 32,000 budgeted machine hours for the period. During the same period, actual total overhead expenditure amount to 108,875 and 30,000 machine hours were recorded in actual production. By how much was total overhead under or over absorbed for the period? Okay, we have a company uses absorption costing 3.5, budgeted units are 32, actual overhead is 108, and machine hours are 30,000. So if rate is 3.5, multiply by actual hours will give us 5,000 absorbed minus 108,875. We would have 3,875 under absorbed. In a pie chart representing the proportion of the sales made in each market, what would be the angle of the section representing market 3? A company sales in last year in its 3 different markets were as follows: market 1, market 2, market 3. So remember, the total decrease in pie chart is 360. So if we take 51,000 divided by 300,000 total sales, it will give us percentage. Percentage multiplied by 360 will give us 61 if we round it off. What is the coefficient of variation as a percentage? Number of daily complaints to local government has a mean of 12 and standard deviation of 3. So what is the coefficient of variation as a percentage? Okay, we have 12 complaint mean as a average figure, and there is a 3 deviation in that. So if there is 3 deviation, 3 change, divide by 12, that multiplied by 100 becomes about 25% change. So out of the 12, if there is 3 change, it would mean 25%. What is the economic order quantity for inventory item to nearest whole unit? Purchase price of an inventory item is 25 per unit. In each 3-month period, the usage of item is 20,000. The annual holding cost associated with 1 unit of equate to 6% of purchase price. The cost of placing an order for item is 20. Okay, economic order quantity. Remember, economic order quantity formula will be given to you here in the formula sheet. But I know it, I don't need it. Yeah, here, 2 COD divided by CH. Okay, we have price of an inventory 25. We don't need price, but because holding cost depends on price, that's why in this question we need price. Otherwise, normally we don't need price for EOQ. So we have CH. The cost of placing an order for item is 20. So we have 20 equals CO. And demand is 20,000. So we need these 3 things. Yeah. 0.15, 20,000 and 20. So we have 2 multiplied by CO multiplied by D, 20,000 divided by CH, which is 1.50. Becomes how many 3's are there? About 5. Let's put this in calculator. By 5, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Becomes about 730. Why is it in points? Two multiplied by CO multiplied by demand 20,000 in each 3 months time. Okay. So be very focused on these small things. Every 3 months, that would mean multiply by 3, multiply by 12, divide by 3, or 4 quarters, just multiplying by 4. 80,000. Is there any other trick? Annual holding cost. Okay, I thought this would also be monthly. So I think I have to do it here. 2 multiplied by 20 multiplied by 80,000 divided by 1.5. 2.1 million. Yeah, there are about 5 3's. So 1, 2, 3, 4, 5. About 1460 if we, and they asked to nearest unit, so if we round it off, it becomes 1461. And then finally, what is the percentage probability that a student would score more than 80? Okay, the result of chemistry exams are normally distributed by a mean of 60 and a standard deviation of 12. So if we are predicting probability of scoring 80%, that would be 80 minus what they normally score, which becomes 24. And if we half it, it would be 12, because standard distribution means it is 50% here and 50% there. So if we divide it by 12, it will give us 2. If we go to the standard distribution table and look at 2 exactly is 0.4772. So 0.50, because 50% here and 50% there, minus 0.4772. It becomes 0.0228, which if we multiply by 100, because they said it as a percentage, would be 2.28%. They didn't say anything about rounding off, so I will write exact. Okay guys, so this is it. I will also make a separate video on additional MTQs questions. This is it.